Welcome back. Another day, another stream. We'll be starting in about 8.5 minutes here. Welcome back. How's everybody's weekend? Hope you guys all had a good weekend. Relaxing. Hey Jody. Hey Howden. Victory and Skirt. Welcome. Pretty busy. Yeah, like I wish weekends were more relaxing, but it's alright. It's like just time for me to catch up on other stuff that I need to do. But it's back to work tomorrow. Hey Keel, hope you're well. Yeah, the 24/7 grind is real. Let's see how many people we can get on Sunday. I think I was looking at like the most amount of people I think come on Wednesdays for some reason. But I would have expected it was like, I don't know, like a Thursday or like a Tuesday. I don't know why it's Wednesday. It's just like in the middle of the week. Yeah, let's see how many people we can get today. Also, I saw that Don didn't have his webinar this weekend, right? So if you guys were prepping a bunch of questions for that, I guess you can start asking me those questions if you have any. But I think he'll be back next week, and he'll be trading next week as well, right? So we'll see him tomorrow anyways. Excited for a new week of trading. I feel like people get really excited after the weekend because they haven't traded for 2 or 3 days and they're really addicted to the charts, right? They're like, oh wow, I can trade again. But it's like, just, you know, take it as if it was just like in the middle of the week, or just another day. Don't think that the markets owe you a trade, because they don't, right? The markets don't really know about you. You're just some guy, you know, potentially trading anything between like a 0.01 lot to like a 30 lot, right? You're just some guy. The markets don't care about you. So don't try to kind of force positions, especially on a Monday, right? You don't want to start off your week with kind of like a bad trade, something that wasn't your plan, and then it's kind of like, oh, how do I make this back for the rest of the week? And that point, it's annoying. Oh yes, Tom, it is Psychology Sunday. Let me edit the stream name. So welcome everyone. It is officially Psychology Sunday. So what does this mean, right? Sundays are where we talk more about psychology, trading psychology, emotions, FOMO, the whole lot, right? But, you know, just understanding that overall, you know, there might not be too many questions around psychology, and people might want more technical analysis, but we'll do both, right? But in terms of questions, yeah, like, let's focus more on psychology on a Sunday. Yeah, what's up? Just ask questions, man. Because like if you ask me if you can ask a question, then if there's like a 3-second, 4-second delay, and then afterwards, no, the Sunday is spelt correctly. It's just silent P. What do you mean? Did you even go to school, bro? Do you not even know how to spell Sunday? How long are you trading? I'll be trading for the rest of my life, man. So total, I mean, if I die at like 80, like another 50 something years. Best way to deal with overconfidence while, I'm guessing, in a winning day, week, month. So win streaks, while on a win streak. When would you like to take a flip of candle as opposed to a wick entry? Yeah, so I think you've been here quite a few times, man. Like, I think in general, when we typically explain this every day, I would say. But I'll keep this in mind in terms of a question for when we do the actual analysis stuff. But yeah, it's mainly just above. It's just about like how much confirmation you need for that trade, how confident you are, and what would you like to see for the trade to play out, you know, with even higher confidence, right? Sometimes we need less confirmation because it's already showing us a lot of, you know, things that potentially, yeah, gold is definitely going to go in this direction, right? Then at that point, maybe the wick is fine, right? Because we're understanding that the wick is just part of the move that's going to continue in the direction that we're looking for gold to head. But in some cases, we haven't had that confirmation, so we look for potential like flip entries, right? A breakout flip, right? Or whatever. Or a steep wick, then a flip. All of the above. But cool, guys. Yeah, just 1 minute. Ooh, we have 20 people on a Sunday. Yeah, so welcome everyone. We are, you know, by the title, it's called Psychology Sunday today, so welcome. We're going to be mainly talking about psychology. You know, any questions about FOMO, emotions, and all of that is more welcome on a Sunday. But we will still be doing an analysis and whatever, right? So, just going to get started. We have quite a few people. Just going to do a quick breakdown of what happened on Friday, right? So, these were our Thursday levels, right? So, looking for sells at 1990 and potential second positions at 1993. I think it was 1992 or something. I moved it up during the day. Hey, Cam's here. But, you know, we were looking for those sells here, understanding that if you didn't break these lows, you're going to grab some liquidity to come down and then break these lows, potentially buys around 1979, right? So if you got into either, so I called this, right? Took a sell at about 91, and then I also took a sell at 93. I closed full after all of this had no top wick, right? Understanding that this could be shorter term liquidity to start pushing up. And then after that, you know, we you know, just started pushing down, and then I didn't get into any of the buys because when it tapped my level, it was already 5 p.m. on a Friday, so I was out, right? But essentially, you would have made, you know, money on both positions. Like if you held down to here, that's 100 pips. If you started buying here, you know, sure, you can maybe just take profit at the next level, which is about 25, right? So in general, pretty much a W for the analysis on Thursday, and what played out on Friday. Yeah, so cool. We also mentioned that, you know, once you break these lows, price might have enough liquidity for us to start driving up. So let's see what's up. New week. How many more days do we have of November 31st? So about like what, 11 days. So that's 2 weeks, I would say. 9 trading days left. But your monthly is coming close to the flip, right? You did flip on Friday, and now you've just closed bearish. You're now more bearish on the monthly, but you did flip already once. So this could be shorter-term liquidity for us to just start pushing up. But in terms of the monthly, we haven't closed above here, so we need to, for the monthly to give us any more information than it currently is, we need a closure above 1991. You have a bottom wick, right? So at any given point, this could be enough liquidity for us to start driving up. And if you do see a breakout above, we probably can expect a fill of 2060. 2060, potentially even 2070 sorts of areas. But that's going to come in about 11 days, and we'll just see what price does. Weekly closure. Pretty strong bullish closure, right? I would say generally you've closed above here, this here. So now that you've closed above, but you're still respecting all of this kind of support, all right, all of this resistance here at 1991, which is also valid on the weekly. But I'm understanding that with such a bullish weekly close, right, you created a top wick for the previous weekly, potentially just about. So at any given point, this could be liquidity for us to come down, right? Because, at any given point, the previous weeklies, as it was pushing down, didn't have enough liquidity to continue. So this could be a liquidity grab to come down. But regardless, if we're going to see that happen this week, we probably will be expecting a top wick that breaks these highs. And if it then flips, cool, we can look for those flips to come down, right? But if there's a high chance that you're going to break these highs, given that the weekly was bullish, right? You've done a bit of retracement, so your next candle could also create a bottom wick and start flipping up. But if it has no bottom wick on the weekly and it comes up first, you're understanding that you're still respecting 1991, potentially respecting here as well, 1981. So any given point you can flip, right? These candles respected, top wick flipped, right? These candles also didn't break above, but so that's the general idea. So on the weekly, at the moment, I am strong bullish, understanding that you did close above these ranges again. So this could be liquidity and is more likely to be liquidity, because if you look at what happened previously here, right, you had a weekly bottom wick, came all the way back down, you respected here, which you did, you closed above 1968. So now, is this just us pushing towards 2030 and then eventually 2060 sorts of levels? All right, so that's kind of what I'm looking for on the weekly. On the daily, I'm understanding that we broke the highs, closed bearish, respecting 1981, right? So what does this indicate to me? It indicates that you filled the range going up to here, and now you've closed below. A closure below means that you don't have enough liquidity to continue driving, right? So I'm looking left, back into this box, right? Last time you wanted to start breaking out, what happened, right? So I'm looking very specifically at just at these, right? So you've tapped into 1931, 1935 sorts of areas, like these sorts of areas, right? To grab that weekly and daily bottom wick. So once you've come down, once you've started closing back above, you had these candles here that also respected 1981, right? And you didn't get a break above until you tapped into 1950. So therefore on the daily, I'm interested in this level now. I'm interested, why? Because any given point, price didn't break above. So if we're mirroring something like this, we could be looking to get buys to start retesting those highs. Obviously, if you do just get closures above 1994, you may just see an strong push towards 2030, right? So we want to capture that as well. So I'm definitely looking for buys down here, but I'm also looking for buys when we do start breaking above these ranges, because I'm understanding that your next move is likely to be this, and anything above 20 to 2010 is you're probably going to fill the next range towards 2022. So that's your daily ranges. But in general, I would say you still have closed bearish. So in terms of how the weekly is going to open, how the daily is going to open, I don't know yet. But if you create a top wick first that starts breaking all of this, then cool. If it starts coming down, we may take the daily flip to come down plus some structure, all right? Because understanding that you have closed bearish, so at any given point you don't have enough liquidity, right? Look at this, you close respecting some bottom wicks around 1955, start pushing back up. So anywhere between, I would say 55 and potentially like down here, like 55 and 50 is where I'm looking for buys, anywhere in this box, right? I'm gonna move this down slightly so it's like right here, but yeah, 55 and 49. Well, as we go down to the smaller time frames, we'll see exactly where this is, but at the moment it's around here. 4 hour, cool. What does a 4 hour look like, right? So the 4 hour, we've closed bearish back into, I guess, let's have a look where the actual range is. I'm going to say the range is potentially around somewhere here. It's not too clear on the 4 hour, actually. There's a bunch of, difficult ranges that went on in this area, and it's not the clearest, right? But if we jump down to the 1 hour, maybe we can find something. So cool, it looks like you're respecting something around here, right? So this looks relatively decent. Might move it down just a tad, down to around these areas. Yeah, so those bottom wicks are fine. This is also not too bad. Let's have a look. More importantly is this area. So in general, if it's respecting here, it's not bad. I'm understanding that now what I'm interested in is potentially something that's around here, right, before this move to come down. So what can we take? Are we potentially getting sells around here, right? Sells around here. Interesting. I am actually going to open up a second screen. And based off of, I think this was last week's stuff, but based off of other levels, I'm just going to remove a bunch of these. So have a level around here. Okay, cool. So last time price was in here, you've already tapped into here. So at any given point, this could be the move, and you might only get a buy towards here. You did range for a while. I'll look for some sort of like breakout above, like something like this. Bottom wick breaking all, and I'll maybe take the flip to start going up somewhere here, like this. So if it mirrors this, I'll look for flips to go up. Because at any given point, you're printing some 1 hour bearish structure here, so this bottom wick could just continue coming down. So I can't just take a buy there. Right, but if it flips, starts breaking these highs, I might just have a buy stop on the break of these highs to start going up. In the case where you do start continue, like for example in this case, right, you continue, you break the highs, so you maybe break the highs towards these sorts of areas. I mean, this is a little bit far. Yeah, if you start breaking into those sorts of areas, I might look for sells to come down. If you haven't tapped into, I would say even like 1973 towards 1950 sorts of areas, I would say. Yeah, on your 4 hour, this mirror, right, was after you had liquidity. So I'm more looking at this in terms of structure. I know you filled the range, right, but at any given point, the fill of the range could just be like, oh, price just continued pushing, and this could be the liquidity grab we were looking for to come down. So potentially below here is not bad. If you get a closure below 1974, let's go to the hourly on both. Let's see what it looks like. Did I go too far? Nope, it's right here. So hourly closure below 1974. Look at this, right? Closure below. Yeah, okay, cool. Probably look for a closure below here. So I'm understanding that if you do start breaking some of these highs and then coming down, right? Similar to this, you had some highs, you broke it. I don't need it to break this high, I would say. If it just breaks around towards 1988, these sorts of areas, like 1987, breaking all of these highs and then coming down, so something like this, I'll look for those sells as it continues doing this, right? You may get the sells if you don't break the lows first, but in this case you also broke the lows and then came up. So I couldn't have taken these sells because at any given point this is liquidity for us to start driving up. And in any case, right, I'll look for the kind of sells below here. So that's what, if price is mirroring this, then I'm looking for the sells below, off of like a breakout below 73 to start retesting the lows. I do also understand that you have very clean traffic below 77, but below 77 I'll need structure to get printed first. So if in the case that, you know, potential structure like this forms, where you just start pushing up, right, and you start ranging around here, right, and then you get like potentially a breakout celery or top wick and then flip to come down, then I can take the flips below here, right? But if it starts ranging below, or like, you know, starts coming trickling down, then I can't take any sells around these areas, if that makes sense. But my buys, because it's the start of the week, I don't have any very oops, actually let me put this on here. Yeah, so what is it? Sells below. Yeah, cool, let me get rid of this screen. But generally that's what I'm looking for in terms of price at the moment. So either a sell below here just to make, you know, use of this range, this very clean traffic sort of range here, or if you start, you know, coming down, if you start like breaking below here, then I'm expecting a weekly bottom wick first. As it comes down, you're probably going to tap into 1955 to 1949 sorts of areas, and once you do that, then you probably have all the liquidity you need to start breaking above, right? But if you start breaking above, I can't take it above 1991 at the moment, because I'm understanding that at any given point you still need liquidity. So where can I take it, right? Potential 4-hour breakout below, a breakout above. Hourly, what were the signs that showed us, you know, you all tapped into these areas first, right? So that's what I'm worried about. If you haven't tapped into those areas, do you have what you need to start pushing up? Do I have enough candles on 30? Yes, I do. Yeah, it's not bad. Move this up slightly. Yeah, the buy's around 49. I'd say you could get a first position towards maybe around, yeah, these levels aren't bad for a first position potentially. 57 and 49, so your stop loss obviously is going to be below like all of this, right? But as it comes down, I'm looking mainly for this. So this position depends on structure, right? If you had something like this where you had a huge, like a very small liquidity grab, right? Not anything like this or like this, then cool. Once you break all the way down, I might be looking for those buys, but it's a quick rejection and I'll need to see some structure, right? For example, if it does something like this, right, where it comes up first, like after tapping maybe like 1959 or whatever, doesn't fill the range, and then you start coming up, and then I'll probably look for a sell to continue down, right? Because I'm understanding that you haven't filled the range, there's a high chance you're going to fill the range. But if it does something like this where it's faking out and it's going back up, I wouldn't look for the retest, right? Because at any given point, it's just going to continue ripping down. So instead, I'll look for the safer buys here, because at any given point, right, you're gonna need some liquidity to break below. Every time you wanted to break below here, you grab liquidity at 57. So I mean, it's not too bad. So those are my buys, sells. Okay, yeah, I wanted to look at if we got a breakout above where 91 is not bad, but we're at 91. That's the issue. buy above here. It's not too clean. Let's have a look. Left. So what are our current ranges? Looks like it's above, not even. Somewhere around there, 92. I guess if we get a breakout above here, I'll probably look for a breakout above 95. But at the moment, since we're back into this range is disgusting. Right, all of this is so much noise. And we're back into this range, and it's not been the greatest range for us to trade. So I'm looking for above or below, first of all. But it also depends on structure, right? So for example, if you start coming up first without breaking all of these lows, and then it comes above here, I can't take the buys, right? I'm understanding that if I do want to take the buys, it's gonna have to break some lows down here, and then I might look for the flip, right, to start going up. That will be my buy in that case, right? But I'll need it to break some lows. It needs to show me that it's not gonna just grab liquidity once it like starts pushing towards like 57 or 97 or whatever, right? So that's the structure I'll need to see for the buys. The best structure I can potentially see for the buys is, something like this, comes down, grabs liquidity, then I'll have a buy potentially off the rip here, or maybe I'll look for a quick, I'll have a buy stop on the next candle to start going up, right? But the sells below, so if price does exactly this, right, just does something like this, I can't take those sells either, right? Because you haven't broke any of the highs, you haven't broken any of the lows. So if it does break the lows, I'm expecting it to continue this bullish push, right, to start going up. So if that's the case, I can't take anything, right? But for the sells to happen, maybe you don't break these lows towards 1978. What you do is you just start doing this, coming up. No, sorry, you don't come up. But instead, you don't do something like this, right? You break all of these highs, you do come up, and then you start flipping bearish, then I'll look for this to come down. And only after you've potentially, I'll still look for a breakout, then a top wick before coming down, right? But if price does something like this, and then just starts ranging like this, and then it does something like this, then I'll look for this off the rip. Why? Because you've ranged at a smaller area, you've had a breakup below this range, then you have a top wick breaking all of this range to start going up, then I'm understanding your push is going to be from here, your next lower low is going to be below here, right? Your lower low in this case is starting from 1980, but in this case it's below 1976. So you've already cleared the range, about 40 pips of range. So once you get that sell below here, it's likely to fill the next range, which is 68, or you might even see it down to around like 64 sorts of areas. But yeah. I think that's the structure I'm looking for. I mean, it's a Monday. Just wait for price to print some shit, and then we'll take it, right? But for example, something like last week where you had this similar thing, you started pushing up and you came down. You haven't broken any of the lows yet, right? You broke the lows, to some degree around here, but you're starting to range around here, range, right? So if you do get something like this, and then you get a break of the lows first, without breaking any of these highs, then cool, I'm going to be looking for the buys to go up instead of the sells to come down, right? If you're just looking at this case, which is pure price action, then you have enough to fill the range, you grab more liquidity to break out, and then you start pushing, right? So it depends which one you break first. Do you break the highs first, or do you break the lows first? So in this case, the highs for me are towards these areas, right? Like anywhere around here. And the lows for me is anywhere, obviously, like below here. So if you break the highs first, then I'm looking for the sells to come down. If you break the lows first, then cool, I'm looking for the buys to go up. That's basically the analysis, guys. Just make sure I haven't missed anything. Am I looking for sell wicks? Depends on structure, but it's difficult to tell right now. Yeah, let me refine this area a little bit more. 1949. I know it's a strong area here, but what about the like potential first positions? 57. So what I don't want to potentially miss out on is all of these, like the wicks that just touch all of this level here, right? I'm just trying to make sure, like, look at this, like this wick, that was like 4 pips above there. This wick was like, what, 6-7 pips below, and all of these were just, right? I don't want to miss out on all of that if it potentially does come back down. Like in this case, right, it came down, then you had an advantage, like it came all the way back up for 70 pips before it came back down again. So there's a lot of room for, like, depending on structure, right? If it just drives really heavily without grabbing any liquidity, then cool, you may be able to look for those buys. But if it grabs liquidity before coming down constantly, then yeah, it might be just us watching price. But I'm liking this area. Yeah, okay. I'm probably gonna stick to here. Yeah, it's not bad. If it does something like this, right? No top wick, no bottom wick, right? Yeah, I'll probably look for a buy off, like off the rip for the next one. Yeah, and then if you get into a drawdown, get into another buy around here, and you're looking to exit break even, or potentially if price comes down, right, you may have a larger stop down here. What's this? 130, 140, 140 pips. It's not too bad. Understanding if it does come down to here, it's definitely wrong, right? But I also don't want to use this as my stop because it's a little bit short, and like if it does this, right, if it just wicks down to here, starts pushing up, what am I going to do, right? Yeah, so probably using this as a stop, 140 pips. But cool. Right. Yeah, that's the analysis, guys. Relatively, I would say it's actually slightly more difficult this week, right? Last Thursday was quite simple. We understood exactly where price wanted to go, right? You had this push on Thursday, so on Friday we were looking for a break of the highs, some structure, some liquidity, and then potentially retesting those highs. At the moment, you have retested one of my first levels that I'm looking for liquidity at. You have broken the lows, but is this enough liquidity for us to grow, continue up? If it is, lovely, then we'll get the buys above here, right? But I just need another break of the lows, and then if it does, cool, I'll look for the buys. But if it doesn't, right, if this is not enough liquidity, you might see it come all the way back down to those weekly areas, sorry, the daily areas, where you had all of these bottom wicks, right? So you've really tested down here, 1935 down to 1930, 31, right? So your next area of liquidity that's being grabbed is towards 1949, 1950. So that's where I'm looking for price to tap if it wants to continue going up. Yeah. But cool. That's basically it. I'm gonna let some boys out and see how their weekend went. But yes, it is Psychology Sunday. Oh, we only got 2 boys today. Hey guys.
Yo. Hello, how are you?
Yeah, good, thanks guys. Good weekends?
Yeah, bro, what about you?
Yeah, busy, but yeah, not bad. You guys are excited to trade again, right?
Yeah. Sorry, it's true.
Yeah.
That's funny, right? That you're excited to trade.
Yeah, but it's like, you know.
Well, at first I feel like it becomes for the money, and then it's like once you're actually excited to trade, just to trade.
Yeah, no, I just want to see what price does, like.
Right.
Because I'm interested to see, like, are we gonna? Yeah.
I wanted to ask. I'm pretty sure I'm missing something in my brain, but why couldn't we just take a buy here, like off the rip? Because you're understanding that if you do want to come down, or if you do want to, like, either way it goes, you're gonna have to either break the highs, and then if you do break the lows first, you're gonna go up. So right.
Yeah. So why you can't take it the buys is literally just because of one reason. Like if you just look on the daily, your daily close below here with a top wick breaking. At any given point, this could have been the liquidity grab you need to start pushing down. So if you just like, I mean, for all the candles that you're expecting a top wick for, the next daily candle, there's probably a slightly higher chance that it will have no top wick, that it can have no top wick and just starts pushing down.
Because you already grabbed liquidity.
Because you potentially already grabbed that liquidity. Like, look at this. Right, top wick for the previous daily. Next daily, no candle,
no top wick.
Straight down.
Yeah.
Right. So that's what you would be worried for. Like, look at these as well, right? You had a top wick for this daily. Next day you just pushed.
So you could, but it's probably just not the highest.
It's just like, I mean, all trades there is a probability that you'll win, but generally we just want the higher probability, right? So in this case, if it does create that bottom wick first, then we don't even have to sit in that drawdown and we just start taking the flip to go up. Yeah. Oh yeah, Tom, you sent me a question on Friday. So you didn't really understand what price was doing around these sorts of times, right? What were you looking for?
Well, to be honest, it's been the weekend, so I can't remember exactly what I was looking at. It was pretty much when we broke those lows.
Yeah.
That's what I was looking at.
Wait, so you're looking for the buys to go back up?
I can't remember exactly, but I was basically sort of confused as whether the move up was the liquidity to come down.
Okay.
The lows was now the liquidity to go up.
Yeah, okay. So I think the main thing is you just have to identify where your highs and lows are at that point, right? So I have a high around here, I have a low around here, right? I'm understanding that you're ranging here. At any given point, we need to have an initial look at where price is breaking, which high and which low, right? If you break these highs, there's a high chance that, cool, because you haven't broken the lows, but you're breaking the highs first, you're going to need liquidity before you break the highs again, right? So just kind of this. If you do this, right, we're understanding that it's going to come down, and at this point, price can make a decision, right? Are you bullish or are you bearish? If you're bearish, you're going to come down. If you're bullish, then this is liquidity for us to continue up, right? So what happened here was you had a breakout of the highs first, pushed up, and then you started rejecting, right? You rejected and you ranged here. So that's why I was looking for those sells around here if you didn't break the lows first. So we had those sells, we came down, and once it broke these lows, right, I was like, okay, cool. We could be looking for some sells, potentially to come down. But you also, I think, tapping into 1979 or whatever it was our level for buys, because we were understanding that if you were going to continue going up, you need the liquidity. So once you break these lows, this could be liquidity to start going up. So it's difficult to take the buys, especially on a Friday afternoon, where price is just going to stop, right? You don't want to be holding over the weekend. So I would say at that point, you just kind of stop, right? And then just come back on Monday and see what's happening. So at the moment, what it's looking like is price is going to range here for a while, right? What you're going to get is you now have new highs and new lows. Right? You have new high and you have new lows. Whatever breaks first, again, similar to this, I'll be looking for the opposite direction, right? Because I'm understanding that if you break the highs and then you start coming down, then cool, that's a higher confirmation for me that, okay, you've grabbed liquidity, you're going to come down, look for some sells, right? But if you start breaking up first without breaking any lows, I'm understanding that, okay, I'm worried, right? Is this going to be, at this point, this entire range here to here is unplayable unless you break the lows first. If you break the highs, is this liquidity for us to come down, or is this us going up? It's a 50-50 to me, right? But then once you break above this, then okay, cool, you've confirmed, okay, yeah, you made a low, you made a high, came down, broke the lows, and now you're going to continue up, right? So similar to this structure where you push up, broke all the lows, and then you had enough liquidity to start going up again, right? So that's what I'm looking for. Is this, at this point, right, in this structure here, only at this point above this candle, like a closure above this candle or like a breakout above this wick, do I know that price is bullish? Because at any given point, this, right, could be, oh, okay, this is liquidity for us to come down because you broke these lows. But at this point, you're making a higher high. Does that kind of make sense? Yeah. Yeah, I feel like explaining it like this is actually clearer in terms of like which high or like which level breaks first.
Yeah.
But yeah, that's in general basically what I look for. Because I'm worried, right? I'm always like, I'm scared as a trader. I don't want to get into a trade where it doesn't make sense for me, right? So if it breaks the highs, I'm like, shit, what is the worst thing that can happen? Price doesn't have enough liquidity to push up. That's what I'm worried about. So at that point, I'm looking for potential. Okay, can we look for those sells to come down to grab liquidity? Because you need to break the lows, right? Or understand that every single time you do push up, you break the lows on every single time frame, right? Like, look at this. You ranged here, high, low, up, right? Ranged here, you wanted to reverse in structure, but you broke all the lows before going up as well. Here you want to continue down, you were bearish, coming down, breaking it below, not enough liquidity, grab liquidity, continue popping down, right? So in this case, we were looking for the break of the highs to come down to grab liquidity. I mean, with the 4-hour closing below here, I'm probably expecting a fill towards, at least towards 77, right? I don't know if it goes any further. I think below 73, we're looking for those breakouts below, right? But it also depends on structure, right? So going back to what we had here, if it just comes down to 73 without breaking any of these highs, or like at least this high 82, then I can't take anything because that could be liquidity to go up. Yeah. It's complex. Like there's a lot of highs and lows that you need to break and like all those confirmations, but yeah, it's a good question.
I was also looking on the 1 hour, we've got a closure below, and then the next 1 hour goes back into range, and then was like selecting some more minor levels at 1980.
Yeah, like I think a lot of the times if you just look at how can, like a lot of times I ask myself, right, what kind of trades fuck me, right? In terms of like what trades will I get into and I see is a good setup and whatever, but fucks me. Oh, did we just have, oh, it just opened as well. Yeah, so it just came down. So if you're in those buys, Jacob, you're down 30 pips, mate. But in the case where you have, bearish structure coming down, and I'm looking for those buys, right? You haven't broken any of the highs potentially, and you've just started trickling down, like something like this, and you've come down. Say you get into a buy here, right? What are you expecting, right? The best case scenario is price obviously continues upwards, but there's a high chance that, say you get a bearish closure below here on the 1 hour. So let's draw this out in terms of a candle, right? And then you get in at the low, right? You get in like here or whatever, right? That's your entry. So you're looking for a buy, right? Understanding that you need to break all these highs. Price continues to come down, right? And then you're looking for a retest of these areas to kind of go break even, because you're understanding that you're pushing bearish below a certain range. At any given point, right, price could just continue, right? What is the worst case that can happen? Is if you stack here, and it just continues pushing down, right? Without breaking any highs. And like on these days, I would say aggro days, right? They're very difficult to trade if you're against bias. So that's the main thing I'm worried about in trading, right? Is if potentially I'm in a trade and price is being very aggro, it's just pushing, and I'm in the wrong direction, right? So in this case, if I'm getting fucked, then it's difficult, right? Because it's going in a different way, and like I can't use pineapples to my advantage. What I'm looking for is ideally, at this point, I'll probably just, potentially exit as it breaks these lows, or like potentially some other lows or whatever, or some structure. But normally, I would say when price is following price action, you will see, even if this comes down, right, some breakout below here, you'll see some structure. Like, let's say it does this, right? What you'll likely see after this all prints is price failing to break, right? You might even like get something like this. Like no bottom wick or something. and just continues pushing up, but respecting, right? So that's what price just does. It just ranges after a push. And then at that point, what you might see if it wants to continue going down is top wick, flip, right? So in this case, you're understanding that, okay, it broke the highs first. I am very aggressive with this now. Because if it's breaking the highs first, that's liquidity, likely to be liquidity to continue down. But in the case that price breaks the lows first, right, and then you get a closure above, then I'll probably hold this for longer, right? Because at that point, you've already sat through all this drawdown, right? That's why you don't have stops below here, by the way, because any given point, price can just break these lows for us to grab liquidity to go up, right? So in that case, in this case, right, I'll be looking for, you know, I'll probably put my stops here once this happens, once it breaks these highs, right, after breaking those lows. And then I'll probably trail my stop for every like higher time frame candle, and then I'll just move my stops to like here, and then the next one prints, right? I'll probably move it down to like move it to here or whatever, right? As that continues. But if it starts pushing aggressively, I might like at the next level, I might be getting out at break even or like, sorry, not break even, but like at my advantage point, because I'm understanding that, cool, depending on like how steep this liquidity wick is going to determine how far we drive. If it's a, you know, a smaller wick, I might only see a fill of the range before it comes all the way back down to my break even, right? And do I want to sit in a trade for another like 2-3 hours before this plays out? Probably not, right?
Yeah.
But yeah, like I always think about like how can this trade fuck me up, and then I look to see how that's gonna change. But now look at this, right? You broke the lows first. Your daily has no top wick. Your hourly, 4-hour, weekly has no top wick, right? If it continues pushing, right, where are our levels? I can't get the sells below here because look at this. If this flips, it's gonna go up, right? And if this could be just a bottom wick, you've already broken the previous bottom wick. So at any given point, if it flips, you're probably going to see a drive to continue up, right? It's just I'm expecting more liquidity to come down. So the sells below here now are invalid, right? The only way these are valid again is if price comes up, breaks these highs, flips on the daily, right? So in terms of current price and on the daily, if price now flips, breaks these highs, and then continues bearish, right? At that point, price is doing something like this. You've broken the highs, now you're breaking the lows. So I'll look for those sells here to continue down, and I'll put my stop loss here or wherever that is, and I'll look for the next area, right, which is probably somewhere around these sorts of areas, 1968 or whatever, like maybe this wick, whatever that is, right? But that's what I'll need for those sells to happen. But yeah. Any psychology questions?
Oh yeah, I was trying to think of some. But,
yeah, safe. Oh, Jacob has his hand up. What's up?
I can go first. I don't mind.
No, I just had it up so I can get unmuted.
Oh yeah. I'll just let you guys unmute.
But yeah, I was gonna say.
Oh, that is the wrong button. Oh yeah, you guys can unmute yourselves. Yeah, nice.
Yeah.
That's what I was gonna say. Like once you unmute us for the day, just change the setting to that.
Yeah, that's what I'm gonna do now.
On and off. Yeah.
But yeah, Jacob, did you get into this buys, mate? Good buys?
Yeah, no. I mean, technically, you know.
Yeah. It's just difficult, right? Like with the way price printed, it's like if you just take a buy now, it's like there's less confirmation. Not saying that there's
You're
no
basically
confirmation.
just sorry to interrupt you.
No,
It's
no.
like why guarantee yourself drawdown, right?
Exactly. Yeah. I'm looking at this daily as well. Like you actually closed bearish, potentially. Like oh no, it is still below. Never mind. I zoomed in and it's below. But yeah, like if you zoom out, it's like oh, is that just above? Is that a celery? Like, but you also generally, right? Your level is around here, 1981. So it goes below. Yeah. Hey Johnny, how you doing? You guys can mute as well. Yeah.
Sorry, I was driving.
Yeah, no worries. I wanted to review your question as well. So I think you posted that in the evolution.
Yeah, that one. Well, it's 1992. Such a strong
so
level.
why
in
was
the
I
past.
aggressive with it?
Yeah,
right?
and then I'm like, well, why are you so aggressive? Because we came up pretty like casually, basically. We just came up top of range.
Yeah, literally.
I mean, I know we had one closure above like flat 1992 level on the 15, but I don't know. I was just like, we respected on the hourly, and then it's like we're in for sells like all the way down to like 17, like 80 sort of like. That's what I was thinking.
So for sure, I feel like you definitely could have, been less aggressive. Like I definitely could have been less aggressive with it, but obviously hindsight 2020, right? But I would say it's basically because of how the 30 opened up. 30 opened up, no top wick. If I saw a drawdown first and then it flipped, then I have more confirmation that it's going to continue down. But
I mean, surely you could also read that the 30 not having a top wick suggests there's like literally no space, like there's just
for
no
sure
ability for it to move up anymore. So it's going to come down.
I mean, you could say that.
Steam.
You could say that, right? But at the same time, as it's printing all of this, I'm worried that if it wants to come down, right, it might need a break of all of these highs. So like as it's doing something like this, right, it might need a break of all these highs before it can come down.
Yeah, okay.
Right, so that's what I'm worried about, especially because there's no top wicks. If there were top wicks, I'd probably look for I'd hold it, right? But because it was like this and I kind of went into like profit immediately, I was slightly more aggressive with it, because any given point we were bullish, right? So this could be a lower low to continue a higher high before we started rejecting. But even though I was more like confident with 1993, at any given point, because these 3 half-hour candles had no top wicks, so I was like, what the fuck? Like, if it, like this candle, right? So this next candle here, it broke these highs and broke this and made a top wick for this. So I was worried that this was gonna do this, right? It just can continue up. But if it did, then we'd be looking for more sells on the flip to come down. But it didn't.
Yeah, I mean, I don't know. I just felt like even if it came back up for liquidity, having respected 92 like that, with the like dead on 1992, with a 15-minute fake out, I was like, and a 30 AS, I was like, oh, sick.
I mean, there's multiple ways you could have read it.
Of course, I wasn't looking at the charts when it was happening, so I missed it. Fantastic.
These are some great plays,
So that was so fun. I mean, I still got to sell later on. I can't remember what happened.
Like I think
I got tapped out, basically break even on it. But that actually ran. What time did I take that? At like 2 p.m. I took a sell on the 4-hour flip or something.
Oh, okay.
Yeah. But it.
Yeah.
I think I just moved. I moved too early onto break even.
I think the main thing is like,
tap me out.
Even if we did, like we missed part of the move. Let's say I think I closed like around here, like this bottom of the range, or like somewhere around here. Like I think max it was like 20 pips or whatever. But even if this was all I caught, right? If price that I can still be looking for another setup, right? If price breaks these highs and then starts flipping bears, I then have another sell. But it just didn't, right? So I don't need to catch all of it, but I can catch bits of it, like bits that I have the highest confidence in, because I don't want to be in a situation where I'm just in this range, right? I don't like this, right? If it wants to push, I want to be part of this move, where you have a very where the fuck? Like this move, right? Where it's just very aggressive coming down, right? So potentially the sells wicks here, because you the issue with this one is you didn't close below. If you close below and you had a celery top wick, I'd be looking for that to come down. But
I mean,
either that
it didn't quite come up to break all the highs either. So.
Exactly.
I mean, it only gave a top wick for one candle. So it's not the ideal.
For sure. Any psychology questions? I'm trying to make it more psychology based, but it's difficult.
Chad doesn't have it.
I've got a couple, I guess.
Yeah. Oh, there goes.
So basically, I sort of find myself being quite aggressive with moving stops to break even.
Yeah.
And also on the flip side as well, when a trade goes to drawdown for a while, I'm also looking to get out of break even quite aggressively instead of letting it run or hit the advantage point first.
Yeah.
Just sort of wondering if you experienced that.
Yeah, I think there's a natural tendency for, when we're in drawdown. I guess it's slightly better for you in your case, where if you're, well, either side, you're still looking to be relatively aggressive with it in terms of, making money or losing money, right? But I would say typically there's more of a tendency for people to be aggressive when it's in drawdown. We typically have it, which is where if we're in 10 pips of profit, we're looking to exit. But that's only because we understand that we're catching a part of the move, and we're understanding that we're likely going to catch another part of the move. So we're not worried about that. But when we're in drawdown, the reason it's actually because of our trading style, the strategy. Because our strategy involves pineapples and like levels where price is going to reject at or respect very strongly, we have very clear advantage levels where we can, scale in. So even if it does go against us, right? For example, we get into a sell here, but it goes against us, right? We could, not a sell here. Let's say we get into a buy at 57, right? Cool, we're looking at all of this. We're understanding that last time price did come down to these areas. It rejected. But if it doesn't, right? What's your next strongest rejection area? It's going to be towards these areas. So stacking the pineapples gives us a very good, break-even point, which is suddenly you're more likely to exit at break-even. So sitting through all of this drawdown and then exiting at break-even, right, is basically the same as if you just managed to trade here and then just like as it was going break-even, it's the same, right? It just gives price more time to for us to understand what's going on, because typically with like 1 or 2 candle closures, you don't know if it's a fake out, you don't know if it's a breakout, like you have no liquidity or whatever, right? So giving it some more time to play out to see what's actually going on, higher time frames, smaller time frames, so we can manage it, right? But it's for me as well, like I think when I was actually trading previously, it was very difficult for me to sit in drawdown, because I was like especially after if I've lost a couple of trades and I'm sitting in drawdown, I'm like, fuck, I can't be affording to lose all this money again. But once you detach yourself from that, it's easier because you understand that, okay, every trade is separate, right? That last trade, sure, like the price action does affect what's happening in this trade, and there may be reasons why you shouldn't have entered this trade or whatever, but it's still a separate trade. So you need to let price do its thing for this trade as well. So managing it too early or too late is going to have a big effect on it.
But got another one.
Yeah.
And hold on, Tom. Before you start your second one, I would just say, wouldn't it too, Elvis? Like, if you know your exact vantage points, like you shouldn't have no hesitation in your mind to go break even, right?
Yeah, technically, right? So for example, if I get into a buy here, right, I'm understanding that my advantage point I can probably set as somewhere around here, right? Understanding that, so 90.59 towards like, let's say like this wick area, right? So, you respect it, you're probably going to tap these areas, even like these areas, to grab liquidity before coming down, right? So in that case, I'm just waiting for price to tap that, right? But in the case that it doesn't tap and then it starts coming down, then it's like, okay, if price isn't going to tap this advantage point, then what is my next advantage point? And that could be in the form of, let's say price is here, it doesn't come up to here, and you continue down. So my next advantage point is potentially these areas, right? It's going to retest here before wanting to come down. So can I get into a pineapple somewhere around here to exit here?
Yeah.
Right?
Yeah, I think that's more of necessarily. I think I'm pretty good at moving stocks break even when it hits my advantage point.
Yeah.
It's just the flip side when it goes against the initial. Aggressive with closing off the trade at break even. That sort of leads me to my next question, which was, I understand the idea of ranges and advantage levels. When I'm in a trade, and let's say it wasn't a big profit, I'm always unsure where to close for that.
Right.
Range fills and stuff, but then trying to be a bit longer, potentially breaking into a new range or.
Yeah. So it depends. Like I would say that is completely structure based. It shouldn't be emotion based. Like sometimes, like I would say most recently as well. Like I've trained and I've modified how I kind of sit through trades. Like I'm understanding, okay, the total range that I'm expecting it to be filled. Like so, for example, you get an hourly breakout above 95, right? An hourly breakout above 95. When was the last time price did that? You tapped into at least here, right? Hourly breakout, you came back down to grab liquidity, so stop loss maybe somewhere down around these areas, but you tapped into these areas basically, right? So if, like, obviously this is not my, this is probably my full TP instead of my advantage point, because you have advantage point along the way here, like 20 pips or whatever, right? But in terms of like letting it just run over time and where to close, I would say it's the higher time frame advantage point. Once you tap into those, then if you get, especially if you get like a candle closure which is respecting, right, then I'd be okay, cool. Like if you didn't get out the first on this 1 hour candle, I'd be looking for the next hourly candle potentially to fill the wick or part of the wick, and then I'll look to exit there. Because especially if it doesn't have a bottom wick, then yeah, cool. That's why it's very structured based. Like if it continues to push, right, after creating bottom wick and then push, bottom wick, push for every single candle, then it's slightly more difficult, right, to understand where you want to exit at. But I would still say, like, generally you just have you have your TP towards areas where it's like a strong higher time frame level, and once it taps those areas, you're understanding that, okay, same with like how we get into trades. There's a high chance that price needs to grab liquidity if it wants to continue. There's a high chance that price will reject at this area, right? Because that's the move we were expecting. So I'd exit full at those areas.
Now with exiting, what's happened a couple of times that I've set my TP and then it will sort of become so close to the level.
Yeah.
And either because it just doesn't hit the level exactly, or whether it spreads, it doesn't take me out of the trade, and then it like reverses and then it goes to range in the opposite direction. How sort of precise and the absolute point are we trying to be?
I would say, like, for example, if I had a TP at 2001, right, my total area that I'm looking to get exit out is around here. Why? Because I'm understanding this is top of this range, right? Mm-hmm. So like it's just anywhere in this box, I'll just TP out. Right? I've just put it in the center because that's where we typically like tap. But in the case that like I've never really had it, but like, oh, I have like ages ago. But let's say I was in a trade and I couldn't manage it and I was like going to bed, then I'd probably just leave my TP at the very bottom of it because I have the highest confidence it's going to tap there, right? But if I'm managing the trade myself, obviously I want to milk it, right? I want to get it towards 2002, but I'm also understanding that when it gets towards around 2001, it's now a 50-50 depending like on if it's going to reject here or if it's going to push up to 2002. So I might as well just exit here, right? The difference is 10 pips. I can just wait for another trade and make another 10 pips.
Okay.
Yeah, but like in terms of the wider scope of things, your push was from 95 to like whatever, right? And then that like 10 pips at the very end or like 5 pips, it doesn't matter, as long as you're understanding that, okay, there's a high chance it could reject here, right? So I'm going to exit around here, and that should be the exit reasoning as well.
Then so when you're sitting in the terminal or whatever, so I don't know, I sort of sit there and I'm like, okay, do I close now? Like I get close now, and then I don't really know like what point is enough.
Yeah, I would say that generally what is enough is still very structured based. So in the case that you get bottom wicks, you continue pushing up, but you're at a level of interest, right? Like 2001, then cool, I'll be looking to trail my stop towards there on like the breakout of like potentially a 5 or 15 minute candle low, right? And if it breaks, then cool, it'll take me out, right? And understanding that, okay, I'm still happy with the profits, but if it continues to push, then I just let it go, right? But if it starts breaking like a 15 minute low or like a 5 minute low, depending on how aggressively it's pushing, then it might start reversing on me, or it might, need to grab more liquidity before it's going to go up. I don't want to sit through that. Like, I don't want to see 60 pips of profit, and then suddenly it comes back down to like 10 pips, and I'm like, well, fuck, right? Because at that point, you're going to hold, because the 10 pips doesn't mean anything to you, right? So you might as well hold till it gets back up to 20 or 30 pips. But again, that should also depend on structure. If it does come back to 10 pips and it's showing you it doesn't want to go back up, then I'll probably close full at 10, or I'll move my move my stop loss to the 10, right?
Yeah.
I would say too, from my understanding, like trying to make sense with like when you're going into that, because when you start to take profit, you're setting like just a certain area that once price taps there, like that's where you're expecting price to react, right, or whatever. So it's like once you hit that level, you should just, or once you hit around that level, you should take profit. And it's like also that goes with like volume too, and structure, because if you have that level, like in one trade, like with Don, like we had that level. This was like not too long ago. Like it was our most recent. Like when we hit like 77. It was a runner, but it hit it so fast that price just instantly hit the TP and then reverse. So I would say if you're forming structure and then you're like trickling up to your TP, or if you just kind of do it like, it just depends. I don't know. That kind of makes sense to me how I'm explaining it. That's how I'm kind of saying it.
Yeah, I think you sort of mentioned it there. You said around the level. And like those sort of things when it's not precise and there isn't an exact sort of science to it, is where I'm like, okay, well, what is around level? What is? And I don't want to be closing early just because like, I'm sort of like worried about the trade.
Yeah.
Not to do that, but at the same time, like,
but again, like I would say, for example, like in this trade, I got in literally at the top of this, right? I sold and I took profits towards it here, right? But I'm understanding that if it does break below, I'll look for more entries, right? You don't have to take all of it. You can capture, this bit of it. You can then capture potentially as it's coming up, top wick, right? Maybe this part of it, and then after that breakout, you might capture this part of it, right? But all of that stacked together is most of the move. But like that's why in terms of exiting early or whatever, as long as it's in line with your strategy and what you're looking for, then it's fine, because you understand that there's a high chance that price will give you another move and another trade if it goes in your favor, right? So if this broke the highs, I might have had a trade to come down as it was breaking some of these lows.
Yeah, but then when you open another position, I guess you're like exposing yourself to another full TP.
Yeah.
Sorry, not TP, another full
Stop loss, yeah.
Whereas when you're just in one position, let's say you're holding, you've already got stops to break even. So there isn't that risk, whereas opening another one exposes you to a great risk at that point.
Yeah, for sure. And obviously you don't want to like open too many trades, which is a kind of like an internal rule that I have, which is after a trade, I typically wait for either a very, very, very good setup or around 15-30 minutes for price to print some structure so I understand what's going on, right? Because after a trade, I could have exited a trade, took 10-20 pips, but in terms of the market structure, maybe it was completely against me, right? So maybe my thought process was wrong. So that 15 to 30 minutes gives the market time to print candles, so I understand what's actually going on and which direction it wants to go, so I can redo an analysis based off of what it's printing. Because if it's wrong, right, then I don't want to be just in another trade immediately and getting fucked.
Thank you very much, that's really useful.
No worries. It's good psychology Sunday.
So if you've had a win on your analysis, would you approach it like differently, the amount of time between each trade, if you just had a win based on your analysis, or a loss? Because I mean, if you had the loss, would you need to spend more time thinking about,
I think it's the same,
analyzing everything?
Yeah, I would say it's the same, because say I took this win, but I only took this win to here, right? And you go back to here, right? Price could have done anything. Price could have continued pushing up, right? Or could go down, right? But at this point, I'm understanding that price is likely to tap this area because it's an advantage point. So I exited full because I had no top wick, right? So if it starts reversing, like the next 15-30 minute candle starts pushing up, then cool. Like, okay, I'm bullish, right? I'm still understanding you haven't broken any of these lows, so I am looking for those lows. But because you've pushed so hard, I'm not going to look for those buys immediately to continue up, right? I'm going to look for liquidity to go up, or in any case, potentially like once it comes down, right? I'll look for a retest to come down and like we'll maybe get some sells, right? But that's why like after this win, I'd still need some time before I understand what's actually going on in price, because the 30-minute has no top wick, right? Any given point, if it does create that top wick, what's going to happen then? That's what I need to know, right? But in the case that I took a loss, right? So for example, let's say I was in a sell here, right? Because it was coming up to here, I was looking for, okay, you might get a rejection, right? Just a little bit, please. And then I had my stop loss like at this level or whatever, and I get stopped out, right? Cool. I need to understand what's going on, right? Because if price continues back down to here, right? Even at this point, I don't know what price is doing, because it still could be very bullish to continue up, right? So only at this point afterwards do I understand the price wants to come down. Yeah. Right.
Would you say that that's one of your favorite entries? When it's coming down hard and it starts breaking, like properly breaking past the bottom of the structure.
It's something that I'm testing, I would say, which is it's been going well. Break of highs and break of lows. Like I think I took this break here and then I took another break above, because it's just like when it pushes like this with volume and with like sometimes with news, after you've broken all the highs and then breaking the lows, that's when you'll have the most aggressive moves, and like it'll just give you 10 pips in the space of like seconds.
And with those positions, Elvis, you don't have to wait on closures, right?
Yeah, I don't wait on closures for those, just because like if you're breaking like this wick, right, is confirmation that you've respected it here because your closure was there. Once you re-break that wick, right, say you didn't break these highs, if you re-break these wicks, it's difficult to take any sells because you haven't grabbed the liquidity you need to come down. But in the case here where you've broken the highs, I'd like it to be slightly higher, but once you re-break these lows, I'm understanding that your next low is going to be created very quickly if there's a lot of volume, so it might not wait for you, right? But in this case, I'd have my stop loss above this high, which is only like 46 pips, right? Because in terms of structure, if it breaks this high now after breaking the lows, I'm probably going to see like a retest of those highs.
I mean, on that logic, could you have also taken buys up as well on the?
I would say,
let's say like 9 a.m. on that day, as you're moving up.
Oh yeah, once it broke these, I would say no, you couldn't, because you didn't break these lows.
Okay.
Yeah. So like sometimes this structure, right, is very condensed, right? It's within like a couple hours. This took a couple days, right? So you need to like, the push here was Thursday here. The push on Friday was this. So it depends on when the push is and when the volume comes.
Okay.
Yeah. Cool guys, I'm probably gonna end it around here. But yeah, thanks for joining up. Sunday, we had like 45 people peak on a Sunday night. It's pretty nuts. But yeah, I'll see you guys for the members only breakdown tomorrow, Zoom. So make sure you're there. But yeah, that's about it. Yeah, cheers for joining. See you guys tomorrow. I'm just gonna sign up for the sign off the YouTube live, and that'll be a day. But yeah, cheers guys. See ya. Yeah, for everybody on the YouTube, cheers for joining. Thank you for 45 people joining on a Sunday night. Hope it was useful for you guys in terms of education, in terms of psychology. But yeah, like this is what we do every single day. We have a members breakdown for tomorrow, so I'm not going to be live for free tomorrow, right? But I will be back on Tuesday and Wednesday and Thursday. So I will see you guys then, and just prepare some questions. You know, if we have time, we'll go through your questions. But yeah, hopefully it was useful for all of you and you've learned something. Be patient with the charts, I would say, on this Monday. You need to see what's happening first. But yeah, cool. Cheers for all the love, guys. Thanks for liking up the streams, and I will see you guys soon. Peace.